Hey guys, welcome back. So in this video, um, we're going to talk about support and resistance from structure. These are mathematical levels, not random lines. Okay, so I'm going to teach you how to identify support and resistance mathematically without guessing. Okay, so the problem with random line that most trader draw support and resistance lines randomly. They see levels that looks good and draw a line. That's what I call gambling. Okay, to to illustrate this, like if I disable that, what trader will do is like they will draw a line here. I mean, um, yeah, this ray here, and they will draw here, and they will say, okay, this resistance here became support there, which is not wrong, but it is random. Like I can also come here and say that okay, this resistance there, like then this resistance there. Sometimes it will hold, sometimes it won't, and yeah, I mean, it's not, this is like just basically eyeballing it, and yeah, and this only becomes costly when you lose money, you know so, and it is very costly, by the way, drawing line manually. So by the end of this lecture, you'll know exactly where support and resistance levels are. Okay, and on any chart without guessing, and these levels are calculated mathematically, not drawn. Okay, so let's dive in. All right, so the solution that I told you is to identify support and resistance mathematically. Okay, so if I come here and draw this one, you can see these levels are automatically drawn for you. Okay, and what we just need to do is like we need to understand what it's doing. So see, before we begin that, the trade that we took, here we took half of the profit there, and another half is running, and the market is coming down actually. So we can take loss, or just move our stop loss to the break even, just about that, so that when the price even come there, we won't lose money. All right. So that's my goal here is to actually teach you trading live, just not the theory, so that you understand what decisions to take when you're in the game. All right. So let's go. Um, so what is support? All right. The mathematical definition of support is a level where buying pressure exceeds selling pressure. Okay, where price bounces up from support. Okay, now why does it bounce? Because there are more buyers than sellers at this price. The market remembers this level. Okay, you see, and I can actually show it to you. If you see here, right, why the price came down from there, you know and why the price came up from there. And if you see right now, this is just white and black coded. White candle means bull, red candle means bear. Okay, so right now I'll just disable it and I'll show you um, what do I mean. And on the canvas I'll just add it to 50, and let's do 25 for now. Okay, so you can see the color of the volume is matching the color of the candle. I call it volume candles. All right. Now, now see, when I enable this volume footprint chart, I want to show you what this sentence means, meaning the buy, because there are more buyers than sellers at these price levels. That's what becomes support. Okay. So if you come here, okay, in the last couple of lecture in section one, I have taught you about the volume. And if you see here, you see this midpoint here, that's your purple line, right? Let me just disable that. You see the purple line, and you see this candle, this volume here. It's very big volume, right? This is your moving average volume, first one. Second one is your Standard deviation one, third, second, first one is second. Hang on. So I'll just like explain it to you what it means. This is your MA, right? Moving average 20 or 30. I think it's 30. Okay. This is your standard deviation one. This is your standard deviation two, and this is your standard deviation three. So when volume crosses above two, that's very high volume. Okay, and there's ultra high and all this stuff, which you can read about it in the indicators description. Okay, now when I enable the volume footprint chart here, you see that there are more buyers, you see 116, than sellers 87, and price bounces off there, and you can see the delta, the difference between buyers and sellers is 29. So definitely we can see that in live example here. Okay, so this is a strong support. You can do the same thing here. You can come here and look for those examples. You see here, see delta is 32. Here you can say delta was minus 89, meaning there were more sellers. That's why candle closed below and around the midpoint. But you see the volume was very big. Okay, and after that we had winning, buyers were winning. Okay, so this was a strong support there as well. All right, so see here delta is 16, meaning this is a strong support level. All right, now coming here, I want to show you the latest example why the price came down here. You see, the delta for this candle was minus 4. All right, and you can see the price came down here, right? And whatever whenever you're looking at the volume footprint chart, look for the zero. Okay, whenever the zero is, like, see here, zero is there, right? And the seller was there, one, so there was like aggressive selling offer there. Okay, and the price just came down. So what I'm showing you is the resistance formation at this 25% level, 75% level, you see, and from there market came down. Okay, so this is how the support levels are confirmed. Okay, now what is resistance? As I showed you here, you know and I'll just enable it again, and I want to actually show it to you. All right, the bigger picture, you know uh, so yeah, just keep watching that, and watch this one. All right, so see, the mathematical definition of resistance is okay, I'll just keep it clean. Okay, resistance is a level where selling pressure exceeds buying pressure. Okay, you see, selling pressure exceeds buying pressure and price bounces down from resistance. Okay, why does it get rejected? Because there are more sellers than buyers at this price. Okay, so when I come here, I can show it to you right here. See, there are more sellers, 44 sellers, than buyers here. Okay, that's why market just came down from there. Again, see here, delta was 0, minus 6, minus 10, minus 2. So you see, there are more sellers on this down wave. Okay, and that's what the forms as resistance. All right, now let's talk about another concept, which is role reversal, which we call the key reversal. All right, what it means is when old tops become future lows, old lows become future highs. What is saying is that if I have some support level here, okay, and the price comes here, like for instance, if I have resistance here, price comes, and when price bounces off, so here when it breaks above, it becomes support. So resistance becoming support. Old tops become future lows, meaning support. Okay, so that's the concept here. All right, so how it works: price hits resistance, can break through, then finally it breaks above with a strong volume. Okay, And when price comes back to test this level, it bounces up. The old resistance has become new support, right? So you saw this old support, old resistance became new support. Okay, so I can show you the example here. I mean, this is the latest. I actually would like to show you the latest example so that you can understand. You know, you see here price tries to go up. Okay, couldn't go up, so it came down. Then it tries to go up, couldn't go up, so it came down. So here, if you see, this was support here for a short period of time, right? And then it became resistance as it crosses there, right? So this is the role reversal key principle. Okay, and if you had entered short there, okay, this was your profit target, 50% level. All right. Now here you see this support level was holding. So this was a strong support, and that's why we took entered long trade, took half of the profit there, right? And another we just let it run. So this is the concept, guys. All right. Now previous resistance becomes support after a breakout. Okay. Previous support becomes resistance after breakdown. What it's telling us is this. Um, so see, so this was previous resistance, right? So if I come here, I can show it to you. See, price actually came down from this, right? Came down. So when price goes up here, breaks above, we I can extend this line forward, you know, and you can see price just came there and halted there, and from there it just went up. So here this resistance became support. Okay, that's what we mean. Yes, support becomes resistance after breakdown. You can see um, here, yeah. So see here it was support, it bounces off. But if I extend this line forward, you know, you can see market took resistance there. So basically, previous support becomes resistance after breakdown, right? So that's the concept. Okay, let's move on. So let's talk about market memory for a bit. Okay, what does it mean? And how we can use it. Okay, so why role reversal happens? The market remembers where it made decisions. Okay, so here if you see bounces off, little bit bounces off, so market remembers that we had bit support here, some people bought it there, so when like market comes to that level, they might be just like exiting with the break even trade, like just selling their like position. Okay, and that's why this breakdown happens. All right, because market remembers it. Okay, here when I do that, I want to show you the delta of it. So for instance, I'll just draw a line first, then I'll show you here. Okay, all right. Well, the line did it. Hang on. So here I'll just do this. Okay, coming back here, you see a lot of selling here. You see minus 125, minus, you see biggest delta, and that's where the selling happened. Okay, the old support became resistance. All right, because market remembers that the historical element for months, sometimes even years. Okay, when we look at higher time frames, and price respects these levels because the market remembers where it made decisions. Okay. Now HTF low major support. Okay. In an uptrend, the HTF prices bounces off it. All right. So if we are in uptrend, you see, you see here market made new high. So this was short period of time. It was in uptrend. Okay. It was an indication. Now when it bounces off here, came down, you see it took support. It took this low as support, right? You see this candle closes above, and if I, yeah, so you can see it acted as a support, right? Major support basically. The mathematical support level, uh, when price pulls back to the STF low, it bounces, and that's mathematical support. Okay, the STF high major resistance. When we are in downtrend, the STF high is a major resistance. Price gets rejected from it. Okay, you see here as we were coming down, here -5%. When the price went up there, it didn't, broke out of that. If it would have broken out, then we would have said, okay, it's in uptrend, and we would look for retracement around 50%. But it didn't. It just suddenly just breaks down. So that's your very strong support resistance levels. Okay, the high HTF high point. Okay, and price rallies to the HTF high, gets rejected. That's mathematical. All right. So and boom. So now let's talk about HTF midpoint, which is dynamic support and resistance. So the most important level, the HTF midpoint acts as both support as well as resistance. Okay, I can show you the example. See here, it acted as resistance because the market was trending down, and then from here it took support, and then boom, it went up. Okay, now if I come here, you see this is the role reversal that I was talking about. You see, this was support. It went up, right? Price to go up, rejected, and then this resistance becomes support now. You see, resistance becoming support, and the market reverses from there. So the midpoint acts as both support and resistance, because it provides a platform for both buyers and sellers to come in and pick the direction, okay, confirm the direction of the market. Here, you see, it came down, right? It stayed above for a bit, you know, um, just a little bit, and then this big candle downside, and then it came down. Okay, so you can see it acting as support and resistance. See here, it acted as resistance, and then when it broke above, like closes above, you can see it acted as support. And there is a lot of better way to, uh, you know, figure out if it's a correct reversal or not, and that we will be figuring out with the trend line. Okay, like for instance, if I put trend line here, see, uh, I just put descending trend line, so I'll just enable it and just watch what happens. Okay, when this hit was a resistance. Now if I take half of, if I take the 1/2, you can see it exactly came to this point and reversal happened from there. Okay, you can see that, right? The market came down. Now if I have the and I'll teach you this tomorrow. The next lecture is about this. I just want to give you some trailer how we can confirm that. If I enable the ascending, trend lines, you see this was coming down here. So market didn't close above with this, with the midpoint. Now if I enable the half of that, you'll see here 1/3, 1/4. So let's see. You see, market was coming there, and then when this line hit on this support, you see, then it was a valid support level, and the market just went up. You see, so this is what I'm gonna teach you guys. This is a mathematical precision that you're not gonna find anywhere. Okay, and I know because I've searched for it. I couldn't found it, and that's why I built it. So yeah. Um, so let's move on. So HTF midpoint acts as both support and resistance. We talked about this. In uptrends, it acts as support. You see, in uptrends, the midpoint is going up. So we can take it as support. Price pulls back to 50% level, bounces, the midpoint is holding as support. We can see that. In downtrends, acts as resistance. Price rallies to 50% rejection, and I can find out this. You see here on the downtrend, price. Let me find better example. Yeah, see here, the market was downtrending, right? Market was downtrending. You see, this midpoint is just coming down. It's making lower lows, and when the price rallies to 50%, then it bounces. Then it just collapses back. Okay, collapse back there. So in downtrend, it acts as resistance. So basically, the geometric system gives you mathematical levels, and you don't need to guess. All right. The swing points also create support and resistance levels. Okay. So as I showed you, right, when you draw a string like this, points and stuff, you know, here you can draw, here I can draw. They also create support and resistance, but those are most of the time not reliable. Okay. The rule is like every swing low and becomes support, and every swing high becomes resistance. And if you see with these lines that we are drawing, it also comes from that swing high, but it's a important swing high, not every swing high. Okay, so you can draw, swing high, swing low from each swing high, swing low, horizontal line, and test for yourself if it works or not. Okay. Now, multiple tests means stronger level. Okay, what do I mean by that? You see, lot of tests, lot of tests, lot of tests. So basically, it's saying the market is holding. Okay, buyers are defending their position very well. So at the end of the day, market is gonna go up if the position is holding. So that's the more times price tests a level, the stronger it becomes. Okay, that's the principle. In action, though, price tests this support level once, twice, three times. Each time it holds, that's a strong support level. Okay, you see here it holds. I mean, like if we look at each individual candle, we can see one, two, three, four, five. Right, but if we see at wave, like one, two, like this is double bottom, people say, but you can see mathematically that it's a strong support level. All right, see. Now, break and retest, that's a role reversal confirm that we talked about. And see this one, break, retest, and boom. Okay. So when support breaks, I can show you this example here. Um, okay. So when support breaks, price breaks below support, then comes back to test it from below. Right? This was support. See, this was holding. Right? So when the price comes down from there, uh, better to actually run it and show it live. So you can see when the market comes, and see this resistance was also our 25% level. Boom, market came there and then boom. We don't even need to draw this line. I just put it as a reference because people draw these lines, and yeah. So you can see when the market went there, 25% level comes down, right? And this support became resistance. Okay, and as the market was already kind of trending down, this was definitely a resistance, and you can see market is keep going down. Okay, role reversal. So now it acts as resistance that we saw. Okay, and that's basically a role reversal. You see this one break down below, tested and then rejected. Okay, trading at support, the setup. So when we are in uptrend, the price is pulling back to the HTF midpoint, which is acting as support. So the trade would be the trade that we took here. So I'll just enable that. Yeah, it's already enabled. See, guys, this candle just boom, straight right back up. If we had closed the trade, we would have taken like very less profit. That's why I moved the stop loss to the break even, like just below, just above that, so that I know that this holds, this support levels holds. This was the trade setup, and it's really beautiful example to show you live that this thing works. All right, because it's mathematics, guys. There's no guessing. Okay, so entry signal price hits the midpoint, bounces with the strong volume. You can see strong volume. I showed you that one here. You can see strong volume. Delta was positive there. You see, and then just below the support level, which is we put our stop there as well. So I mean, initially I put below that, but then I moved there. So yeah, and the target is the next resistance level, which is STFI. That's where we put our target. Okay, and as we can see now, this is where I want to show you something really good. Okay, so see, this is on 15 minutes time frame. Okay, and if I come to 5 minutes time frame, I can see that this resistance is now becoming support, right? So I can actually add on to my position here, right? I can add on to my position, and that's what this was telling. I mean, for the long side is gonna just reverse that, just a role reversal. Okay, this resistance was holding, and now we move upside from there. Okay, so this is a good support, and I can add. You see this big volume, I can add on to the position, guys. Let me just add it. I'll just add another 0.5 which we took profit from, so that when we have a stop loss there, like we can take a little bit hit. Yeah. So, and as I showed you on 5 minutes time frame, we can see on 15 minutes time frame as well, candle wise, when the new candle forms, this resistance is gonna become support, and then it's gonna go up. So trading at support that we talked about, I showed you this example. So we bought at the support with confirmation. That's a textbook support and resistance trade. Okay, I'm telling you, no, very few people in trading era, like in trading channel, are showing you this sort of precision with mathematical context. Okay, but if you have noticed, like I haven't drawn any line. All these lines are drawn mathematically with the indicator. you know and once you have mathematics backing you up in your trade, that's a very high probability trade. Okay, and this example just shows you that context. All right, so key takeaways from this lecture is, first, support where buying pressure exceeds selling pressure, price bounces up. I showed you that with the volume footprint chart. Resistance is where selling pressure exceeds buying pressure and price bounces down. Okay, I showed you as well example of this in volume footprint chart. Okay, role reversal is when old tops become future lows, or old lows become future highs, or in simple term, old support becoming future resistance, or old resistance becoming future support. Okay, you see the market is just like going up, so like pressure is coming, right? If I come to 5 minute chart, you see this was resistance, right? Market was coming down, so now the old resistance has become support, and that's why, like I took trade there, and that's where our target is. So yeah, just guys with like being applying this concept in real time shows you that this thing works. Okay, so fourth is mathematical levels. So HTF high, low, and midpoint. You see these levels. This and swing points are all calculated automatically. Okay, mathematically, it's not drawn by hand, which I showed you already. All right, and support and resistance are not lines you draw; they are the levels the market has already shown you. All right, and like let me show you the volume like working here. Okay, when I turn on the footprint chart, you see this aggressive buying coming. See delta is just increasing, guys. See 1726, meaning buyers are winning this trade. Okay, and you see on each level this very huge volume coming, and it even crossed the third standard deviation, and so yeah. Okay, so yeah, guys, that's all about this lecture. And in the next lecture, I'm gonna teach you the most important concept of this course, which is trend lines and angles. Okay, and how to use mathematical trend lines to catch trends early. No more guessing. Precise calculations that show you exactly where trends begin and end. Okay, this is where structure meets trend analysis. And in order to convince you, let me just like draw some. It's really fun, guys. Like once you use this, it it becomes second nature, and like yeah, it's very fun to trade. Then you see this trend line I just draw, right? You see, as soon as it hits here, market just like bounces back, So you can see the importance of this trend line, and that's what I'm going to teach you in the next lecture. Okay, and I can also show you the descending one. Okay, so see when I plot descending trend line, you see it's breaking out of this descending trend line. So that's a very strong signal. This is the breakout that most of the people teach you. Okay, and you can see it visually. So what will happen? Let me just extend these lines to the right. Okay, and I'll show you where they meet. So they are meeting here around. Okay, what might happen is so price might like come like this and then bounce back to our target. Okay, so right now the volume is very strong, so I'm just hoping that it just goes up. All right. I mean, I'm not hoping, but like the volume will show me the trade will show me how it's gonna play out. All right. So yeah, as you can see, it's just going vertically. So yeah, guys. So live example, that's the philosophy of this course that I'm gonna be teaching you with live replay trading as well as replay trading as well as live trades. So yeah, let me know in the comments what you guys think. Okay, if you have any questions, please let me know. I'd be happy to help you with it. And in the next lecture, we're going to talk about trend lines and angles. So I'll see you guys there. Okay.